All right, Rona, you want to start us off?
Definitely. Thank you, everyone. Rona, I'm one of the student organizers here at the Yale School of Management. I'm an MBA candidate here, and I would love to pass things over to Andrea Levere, our wonderful moderator, who, among many roles she holds, is on the advisory board of the Yale Philanthropy Conference and is a champion for all of us students, and really makes a lot happen for us. So I'm very excited to have her moderating this panel. Andrea, the floor is yours.
Great. Well, thank you, Rona, and welcome to everybody. I hope you are all enjoying this fabulous conference as much as I am. And I see that some of you were on the earlier session about creating 21st century nonprofit capital markets. And this conversation is absolutely part of that. We are focused on a topic that the students came up with, which I thought was quite important, which was really looking at the practice of venture philanthropy, which when we think about it is almost a second in the history of philanthropy, but looking at it and seeing how the moment that we are in now and the issues that we are facing around economic justice, racial disparities, and economic growth is critical to what this part or aspect of philanthropy is trying to address. One of the things that we are going to be discussing is kind of what is venture philanthropy and why does it matter? And then how is this field in the process of reinventing itself or pivoting in ways that can increase its impact by what it is learning through its work with communities? I am absolutely thrilled to have the best panel ever to be able to be part of this conversation. We have Chuck Redman, who's the VP of Finance and Operations at Venture Philanthropy Partners. And he is, I joked with him, the grandfather of the movement, since this is one of the funds that's been around for 20 years. Like, that's not even an adult, really, but yet it is probably one of the longest running intentional venture philanthropy funds that exists. I'm also thrilled to have my long-term friend, Alexandra Bastian, who has worked in the nonprofit sector and in more traditional philanthropy, but she has recently launched a startup called The Imperative, which is really building an endowment to basically invest in Black health, wealth, and connectedness, and is reinventing what philanthropy looks like for these communities. And then it is a special pleasure to introduce Mark Argosh, who is the Executive Director of Social Venture Partners Connecticut, which is actually a national network of organizations that leverage all kinds of talent to support social ventures in their state or region. And he's playing a dual role of also being chair of the governor's Workforce Development Council. And why he's doing that is, as he'll explain, is tied to what his vision of venture philanthropy is all about. We are going to discuss kind of two core questions: why venture philanthropy matters today, and then how the field has evolved over time and what it's doing now to react to the moment. I do want to say that one of the greatest parts of this conference is our active chat on the right. And while we'll have a dedicated Q&A session at the last part of this panel, as our panelists are sharing their experience and thoughts, if I see a question that goes directly to something that one of them has said, I will be sure to ask. So if I might ask Chuck to start us off and explain why venture philanthropy matters.
Great, thank you for the kind introduction. You're always more than generous with your introductions. So I actually have worked with two venture philanthropy organizations I was at the Cystic Fibrosis Foundation before I came to Venture Philanthropy Partners, and both of them were started doing venture philanthropy in the early 2000s, so about 20 years when it kind of, and both really from the same perspective of taking business principles that you would apply in the private markets and apply it to distributing capital in the nonprofit sector. And so in the case of cystic fibrosis, they invested with biotech firms and pharmaceutical companies to do drug development. In the case of Venture Philanthropy Partners, making investments in nonprofit organizations to scale them and grow them. And so that's kind of how I think about venture philanthropy as a thing. And why it's important and why I'm interested in it, what drew me to it is because there's a certain level of intention with taking that kind of private sector approach. So the point of a venture philanthropy fund is to accomplish something. And either you do or you don't. You measure the results and tell yourself that either we were successful or we weren't successful. And there can be an end. So the beautiful thing about the Cystic Fibrosis Foundation, they talk about going out of business. If they can cure the disease, no need for them to exist anymore. At VPP, we're wrapping up our third fund. So, there have been finite kind of periods of time, and we've accomplished some things that we can talk about. But every so often you have to ask yourself, are we still bringing value to the table? Are we actually making progress? And I think that intentionality makes you ask different questions than you might ask if you're in a more permanent capital vehicle like a traditional foundation. So I'll stop there.
Let me just follow with one quick question, Chuck. What is one of the most interesting questions you've asked yourself that you might not in a more traditional philanthropy?
So the question that I'm going to two because they're related. The question that I got when I went to cystic fibrosis to answer was, they had a $3 billion windfall from some of their investments, and they asked themselves, should they continue to raise money, or do they have enough to accomplish their goal? And I think the question that drew me from there to Venture Philanthropy Partners was, can you do can you have the type of success at generating enough assets to solve problems in the youth development and kind of human services space that the rare disease space has seen? And so, can you change the model to really have outsized success?
Mm-hmm. We ask that all the time when we look at what it took to create the vaccine versus how skilled we've been at distributing it, right? Perfect example. So with that, Alexandra, share your very modest new adventure.
Very modest. Well, first of all, thank you to everyone for attending, and thank you, Andrea, for creating the opportunity for me to share about the fund. So I come to you all by way of Massachusetts. I see in the chat a lot of people, saying where they're from. And I'm a daughter of Haitian immigrants, right? And so that part of my story and my culture is very much a part of the way that I see the world, the way that I, moved in my career, and some of the challenges that we saw in traditional philanthropy led us to try to say we need to create a new thing. So my co-founder, his name's Ade Oguntoye, and he's a son of Nigerian immigrants, right? So again, this kind of global perspective in terms of understanding what's happening with philanthropy, what's happening in the nonprofit sector, and even what's happening with Black businesses, Black-led organizations and businesses. It seems like a never-ending cycle where we're continuously saying that there's not enough funding, there's not enough resources, and no matter how many programs get built, we're not getting to the point. So Ade and I, we sat down in our very first conversation. We were in a fellowship, and we talked about the fact that there needs to be something new that centers Black people, because traditional philanthropy has, for most foundations, have been created for other purposes, right? So we want to create something that will center Black people, will work on addressing anti-Black racism, which is a global issue, and we'll do it with a global perspective. And so we've set out to build $1 billion fund that we know will grow over time and won't happen overnight, but we know that that is a meaningful amount of capital for us to try to do the work that we want to do. And so I would say that the reason why venture philanthropy is important is because, one, we need space to create, and traditional philanthropy doesn't always have as much space to create new things. And second, and I think more important to me, is that if you're in venture philanthropy, you know, there's an assumption of risk, right? If you have an investor mentality, there's an assumption of risk. Historically, to be a Black business or a Black-led organization, the Black part is the risk. And what we're trying to say is, no, the Black part is the value. We want to invest in that. And we want to do so permanently because we didn't get to the kind of racial injustice that we see today. We didn't get here overnight. We spent hundreds of years getting to where we are now, and it will take many years, I hope not hundreds, but many years to do the work we need to do to address anti-Black racism. And so that's what the fund is about. Our program areas and investment areas will be wealth, health, and connectedness. We see them as circular issues, so they're not separate. They are connected, and so we intend to invest in that way with that kind of thinking, and really try to move capital on the core of what is causing there to be this continuous challenge everywhere Black people go, where they are facing racial and economic injustice. So that's what we're trying to do at the Imperative. Great.
And Alexandra, Malwin Davila had a fabulous question, I think responding a little bit to Chuck's piece about the Cystic Fibrosis Foundation. And I think you've responded where his question was, does venture philanthropy address more technical problems like a particular health issue, or rather than more adapted challenges like racism? And I think what's so fascinating about the conversation between the two of you is that the answer is yes, both. Do you want to add anything to that question, which I thought was so thoughtful?
Yeah, I think that you know, we're new, so I think everything that we do will be building as we go. And that's the part that makes it exciting, that's the part where we can take chances and understand that maybe not everything will work, but we will definitely develop solutions that do work. And the part, I think, for us where we really have spent some time thinking about, like, how long will it take? That's we figured out that we don't know how long, so it's got to be a permanent fund, right? And we thought about you know, the generational aspect of this from the very onset. My co-founder and I, we kind of started with our elders. If you look at our advisory committee, we started with our elders. We understand our role, and we are very intentional about handing this off to the next generation. And I think that intentionality with which how we're doing this is what's going to give us the room to address something so deep-seated like anti-Black racism for the long term.
Thank you very much. So Mark, you're part of a network that has flourished for actually, I don't even know how many years, yet you have brought a new way of doing business. Would you kind of share that as well as why venture philanthropy matters?
Thank you so much, Andrea, for inviting me here, and thank you everybody for participating today in this great conference. So, I believe venture philanthropy has accomplished a lot. It did change paradigms. It led to kind of a longer term view in terms of investing in philanthropy. It took an investor's mindset, greater risks, unrestricted revenue, more flexible structuring, and I think most importantly, kind of invested in organizations and leaders. It wasn't really just investing in a program or a project in a restricted way. It was really trying to build a cadre of leaders, social entrepreneurs, who really were invested in changing the way systems worked. But the interesting thing along the way is that we discovered in the venture philanthropy field the limitations in just investing in individual organizations. We oftentimes felt like we were failing one success at a time. Failing in the sense that we weren't changing the population outcomes in our communities and in our states, even though certainly individuals were really helped tremendously by the great work that these organizations, performed that we were supporting. And so many of us have kind of decided the paradigm has to change again. If we're going to be true to the innovation side of venture philanthropy, we have to really focus on the deep racial inequities. We have to kind of really change, who is driving kind of the decision-making in venture philanthropy. And we have to adopt a systems change kind of approach, because if we're talking about changing the systems that are really causing racial inequities and lack of opportunity and economic inequality, we need to really engage deeply in those systems. So that, to me, is kind of the challenge that we all have to kind of embrace in different ways. And in my organization, we've kind of taken the approach of investing in our kind of volunteers, our human capital. We have over 200 volunteers, and that's enabled us to work with nonprofits and then also engage with government. Because if we're going to change the systems, we have to engage with government and with the private sector and certainly with community institutions. And that's kind of increasingly where we're focused, Andrea.
So tell me why you took on a second job when you already had a full-time job with the governor.
I mean, one of the questions that I oftentimes get even from philanthropy is, how do you get more deeply involved in systems change? Like, why does SDP, for example, have these opportunities? And the very simple answer is a couple of answers. One is we lean in. In other words, we make ourselves available. And the second is we're intentional about it. We develop our volunteers. We do our work with different organizations, nonprofits, community organizations, to be ready for this work. But we also recognize, to change systems, we have to be able to work on these larger initiatives. So a year ago, the former president of Europe, and I saw some Europe people on this attending this, was asked by our governor to lead the Governor's Workforce Council, which was an effort to kind of create a strategy to transform education and workforce in our state. And I knocked on his door and said, you don't have a staff, but we can provide volunteers. We could show up with a dozen people who are willing to devote large portions of their time. And so over the last year, we helped develop the workforce strategy in Connecticut. And then I took over, a few months ago, the chair of the Governor's Workforce Council. And the reason, to answer your question, why I'm doing two jobs, is because we can now suddenly have the opportunity to have impact. I mean, it has a lot of flavors like collective impact, because we're really convening different sectors, government, private sector, educational institutions, nonprofits together. But we also have the support of a governor and the resources that entails. So we really have the opportunity to move much more quickly in making large-scale changes.
Thanks very much. And Mark, one of the comments you made, which I think is a theme that runs consistently and we'll weave it through, is reconsidering how you actually have impact. So I'd like to go to Chuck, because Chuck, you've shared multiple ways over the last 20 years, even though you haven't been there the whole time, that Venture Philanthropy Partners has done exactly the same thing that Mark did, in ways I think that both align and also speak to differences in VPP's approach.
Definitely. And I do love the adaptive question from earlier. And I would emphatically say that the venture does work with adaptive problems like the problem of race. And I think we've seen that over our evolution. near the tail end of the fund was probably the first big pivot. And that was a realization that they had invested in mostly white-led organizations that were serving populations that were mostly Black and brown. So they made changes. They brought in the first African-American partner. They also brought in a special advisor, Carol Thompson Cole, who later, shortly thereafter, became president and CEO of the organization, a Black woman. So the organization's been Black-led, Black and female-led for the last probably 17 years. So the majority of the history. So that was one way that they pivoted within the fund. And then I think in the second fund, they realized something Mark pointed out, making investments in single organizations isn't enough. It doesn't move the needle. So how do you get those organizations to work together? We created a collective impact approach focused just on the nonprofits. Our Youth Connect program in the second fund had success there, but wasn't at the level of scale of the problem. And that we had to partner with the local governments and the private sector and really broaden our approach to collective impact, which our third fund really focused on that in partnership with the school system and county government in Prince George's County outside of DC, and a set of nonprofits to really focus on a particular outcome, career and college readiness. And so we demonstrated that it can be done, that all those players can work together and move the needle. And then this past year, our latest evolution is we've integrated with the local Strive Together network. So we are now VPP Raise DC. And so we are functioning as a regional backbone for collective impact for all issues related to vulnerable children, youth, and families, pairing that with our capacity building investment capability to really see if we can make change at population level and region level outcomes for youth. I think that ability to adapt and constantly evolve is really important, and it's the only way that you can really make measurable change on the outcomes that we're focused on.
Chuck, just in case folks don't know what Strive Together is, can you just describe it?
It's a national network of place-based initiatives. I'm learning myself, so I probably don't have all the language right, but it focused on collective impact, really creating cross-sector tables, tend to be at the leadership levels with people that can make policy decisions and really drive systems change, and historically has worked more top-down, but I think Strive Together nationally, and we're a test case, I believe, in the DC area, is really thinking, how do you connect those top-down leaders to the bottom up of, the people on the ground, the nonprofits that are working in community, and the insights that you have there? How do those influence the decision makers? And then as you make those policy decisions, how do you make sure that the impact actually drives all the way down to the bottom level? So we're trying to work at multiple levels and make sure that they're coordinated so that you can really make change within the full ecosystem.
Mm-hmm. And I'm going to ask you and Mark in a second, after I ask Alexandra another question, to kind of consider what it's like working at a statewide level versus a regional level. Both Chuck and I live in the DMV, and we don't live in the Motor Vehicles Bureau. We live in the District, Maryland, and Virginia area, which I always think of anyway. But I think that would be an interesting conversation, how we think about impact. Alexandra, there was a very straightforward question in the chat that I want to link to our next leap, which is really how we are reframing what venture philanthropy does and is. You've already described in many ways that your fund is exactly that. So one question, which I thought was really interesting to lead in how you're going to do this, is like, who are you raising money from? And with that, what are the implications for what you can do?
Yeah. So first of all, if you're hearing whistling in the background, it's my old school New England heater in the house. So that's what that is. So how are we planning to go about raising these funds? So when Ade and I were first thinking about this, we knew that there was some actual programmatic work that we wanted to be able to do that would actually help us design the business model for the fund. So we are raising funds for our program work from traditional philanthropy. The other thing that we knew we wanted to do was create a space where we could talk with the Black community globally, right, about investing in ourselves. So that is part of why we didn't make it just an investment fund, but we chose a philanthropy, because we want everyday Black folks and the larger community to want to make a donation to the fund. So we are raising funds through individual donations. We are raising funds from existing philanthropy. And then we are working with, banks and some more corporate actors on really thinking through like our business model, how do we start, which will likely be in the very early stages, will be in the markets, right? Just to earn a little bit on that. And then over time, we'll be able to really start making investments directly into Black owned businesses globally. And in that time, the support that we get from traditional philanthropy will help us to set up the proper infrastructure so that we can do this in the most creative and most innovative way that we know how. So that's the plan. And I forgot what the second part of the question was.
Well, I'm just interested in kind of how that enables you to do your work in a different way, right?
Okay.
One of my favorite rules in life, which came out of the Yale School of Management, is that the most critical rule of finance is matching sources and uses of funds. And it's when you don't do that you get into trouble. Mm-hmm. And it's when you do that you're actually, build financial strength. And then one of the questions in the chat to follow on, where's the money coming from, is how are you measuring your returns? And it may still be early, but we'd love any thoughts around that.
Right. So I think what I was saying earlier about us creating space for, people to donate, as well as working with traditional philanthropy, that will give us the room that we need to have some conversations that we need to have with leaders in the field, right? Our model is literally called Black Space. That's our program model, where we will bring leaders together to innovate and design, and then we'll hopefully fund them to address issues that are affecting us on a global scale. Like, we're talking about climate change. We are talking about the impacts of capitalism, the challenges and the opportunities that it offers, because in some countries, capitalism is the only way to get to opportunity. And in a lot of places, capitalism is causing harm, right? So we need to have conversations about, if we're going to design a business model, how do we do that with those pieces in mind? So that's the programmatic type of work. We'll do the same in the health space. We'll do the same in the connectedness space. The connectedness space is a little different because that's really more focused on our kind of cultural and historical connections, and how do we one, take more advantage of them as a community? How do we create community around them? And then how do we leverage them, right? So that's what we'll be doing in the early stages. In terms of, I think you asked about returns. How will we measure our returns?
Yes. Yes.
That is, part of that will come from the design of the leaders that we bring together to do this, right? We're not saying that we have all the solutions. We're saying we know that it's going to take serious capital for a long-term period to address these issues, and that there are geniuses out there, geniuses all over the world, Black geniuses who have something to contribute, but are continuously facing the challenges of lack of access to capital or lack of access to opportunity in general, right? And so we are going to create space. That's what the Black Space is, so that they can come together and design, and we will base our measurement off of that.
Great, thank you. So Mark, given that we're in this time of profound reimagination of philanthropy, there are many terms being used to describe different activities. And I think one of the questions in the chat is, what's the difference between kind of regular philanthropy, venture philanthropy, mission investing, or social investing? Chuck, I think, began that conversation, really speaking to the intentionality and the time-limited nature and the clear results. But from the stance of social venture partners, which has started this again before many others did, I'd love your sense of where it started and where it is today.
That's a great question, Andrea. And I think that there are a lot of different kind of forms of investing that are being kind of done simultaneously. Whether it's social impact investing increasingly, sometimes it's program investing, recognizing that to build sustainability and scale, oftentimes you want to be able to utilize social enterprises or other kind of private sector kind of vehicles to be able to do that. And there are obviously kind of within venture philanthropy, or there are a lot of different forms too. There are one of the forms we've recently experimented with is to really change the decision rights. Instead of having the decisions made by kind of the donors, having the decisions made by the community members. And what we did is we created with the advice of community leadership around Connecticut, we created a panel of Black and Brown community leaders in New Haven and Bridgeport, and raised a fund where the 100% decision rights are made by those community leaders. And the focus of the fund is addressing racial inequities through systems change. And we were overwhelmed by the response in those communities. We heard from nonprofits that we've never connected with before. And in a sense, we were the least likely organization to try this because we have much fewer resources financially than much larger philanthropies. But again, there's obviously kind of risk associated with that in the eyes of some. We thought actually we were de-risking the process because the people making decisions are the ones closest to the kind of challenges that need to be worked on. They have the lived experience. The investments are going to be much better informed than people who are removed from the process. So to me, that's kind of another example of kind of innovation in it. We also, I guess, another dimension I would talk about is we have a goal focus. It's very easy. I mean, one of the problems I guess I have with venture philanthropy is kind of taking this sort of portfolio approach like venture capital does, where we're going to invest in 20 different things, and if 2 of them work, that's great. No, that's not great. We're dealing with big problems here, and we want to hold ourselves accountable for them. So we basically decided to have a goal focus of closing opportunity gaps in Connecticut with a vision of achieving racial equity and economic security for all. And we every day ask ourselves, are the things we're focused on going to accomplish that? And guess what? Along the way, we found that venture philanthropy, the grant-making part of it is just a small tool. It's kind of probably on a list of the top 10 things we do, it's probably number 10. Much more important is what Chuck described and Alexandra's described in terms of really mobilizing people, whether it's collective impact, whether it's supporting community organizing, whether it's doing systems level capacity building work across multiple organizations, or whether it's kind of leaning into change processes in government that like we're doing here in Connecticut. I think that's where the real value is. That's where we can really change power and how it works in our state, and certainly change policies and resources. So I know that was kind of a multifaceted answer to your question. I don't think there's any one answer, obviously.
Yeah. Well, I think what we're hearing is that in many ways, it's the how, not the what, right? And we're still, the how is evolving so specifically and dramatically. So Chuck, I'd love you to add to your reflections. I mean, you began, I thought, with a very clear definition, and now we've made it very ambiguous. So I love your reflections, because of course that's what life is.
Right. So I mean, I think some more clarity. Like I see in the chat discussions of PRIs, MRIs, and things of that nature. From just a pure finance standpoint, venture philanthropy is philanthropy. It is not seeking a financial return. And so on the spectrum, it falls in the kind of grant making side of the spectrum. I think the private sector principles that I know VPP has brought with how we execute our grants, things such as, when we partner with a nonprofit, we take a seat on their board. We have made multi-year, multi-million-dollar type of investments. So major commitments, and the dollars typically are aligned not only to like youth outcomes that you want, but organizational outcomes. So if we look at an organization and they've got a great leader, but they don't have a chief development officer or a CFO, or their systems need upgrading, and they need those things in order to scale, that's where our investment dollars go. So it's a way of thinking that I think is different and borrowed more from, the private equity space on the for-profit side, than your more traditional grant making that may be, I like this program and it's effective, so I want to support it. It's more thinking about who are the leaders. Are they ready to really be transformative? Do we believe that their model has the potential to really have an outsized impact on the outcome that we want to influence? And let's invest in that leader in that organization so that they have the tools that they need to then go do the work. So that investment mindset, I think, is what sets venture philanthropy apart from your more traditional philanthropy. But I agree with Mark. It is a tool in a toolkit. So it is more powerful when paired with either other for-profit investments that are aligned. I've heard mention of Pay for Success. We did a lot of exploration of, how do we fit with Pay for Success? A lot of our organizations are prime candidates to be part of Pay for Success transactions because we've built up their capacity for evaluation and measurement, or they have, leadership teams that have the mental space to even think about participating in something like a Pay for Success transaction. So that capacity building is, I think, a critical prerequisite to going into the more for-profit or, seeking financial profit type investment. Or you pair these strategies like we're doing and like Mark is doing with the public sector and what they're doing, and making sure that deploying of our capital and what we're doing in building capacity is aligned to what the direction of the public sector is, because they have more dollars than anybody, and bringing the private sector along because in our case, they're demanding. So we're looking at youth development, the demand driver employers who need talent, and the real deliverer of capital is the public sector and the school systems and the services they provide. So we need to fill gaps, but also make sure that all those other players are aligned and working toward the same goal.
And a quick question that came, since you're behaving a lot like venture capitalists, are they giving you money too?
Venture cap. So our organization was definitely started by people that benefited from private equity and venture capital and decided when they wanted to start doing philanthropy. These are folks that made their money in the dot-com boom of the late 90s, early 2000. And they wanted to do their philanthropy the same way that they do their investments. So that is the core of our supporters, or has been. We have diversified over time. And so, we raise money like any other nonprofit, but it probably heavier lean on our kind of core set of our investor network that does tend to be more investors. They're the ones that get what we're doing. Sometimes we try to explain it to more traditional philanthropists and they're like, I don't understand and I can't follow it. But then you go to a private equity investor and they're like, oh yeah, this is what I do every day. You just aren't making any money. And they either think you're crazy or think it's awesome and want to participate.
Andrea, at a new profit gathering, maybe 20 years ago, David Gergen made the point that, why aren't you guys focused on government at all? That's where the real money is if you're going to be changing, systems change. Our governor 2 days ago announced 45 million for workforce development. And we're going to try to do it the right way, as Chuck suggested. We're going to take a kind of demand and equity driven approach. Demand meaning actually train people for jobs that really exist, that have sustainable livelihoods, but then make it equity based in terms of really making sure the people that don't have opportunities really are the ones really who have the opportunities for this training, and then work to leverage existing institutions, community colleges, others that can kind of do that. My point being, it would have taken a long time in venture philanthropy or any other means to basically get those kind of resources. And yet on the same time, we know government has a lot of resources that are squandered, that are not really being used in the right ways. So that's my kind of plea to people to kind of get involved with government, whether it's kind of as community organizers, from the outside looking in, or collective impact, kind of engaging inside, different tables to be able to influence government. Because that's where, if we're really going to change the system, we're going to have to work at all levels of government to kind of really make sure that resources, kind of flow to the people that really, deserve them and need them, and not the way it has been kind of operating. And I know, Andrea, you've had a lot of experience yourself with prosperity now in that realm.
Yeah, well, I also wanted to say, for those of you who are in the audience who are as old as me and Mark, I will reveal that Mark and I went to college together quite a few years ago. I would say that the most innovative, or the first venture philanthropy initiative, was actually the Urban Development Action Grant. And I'm sure there's somebody on this call who remembers. My first thing I had to do when I graduated business school in the 1980s was go into the District of Columbia and structure these first deals, which was all about creating an ongoing source of funds with the public and private sector, and being able to do a spreadsheet and analyze the IRR, and realizing that the private developers were asking for 150% rate of return when nobody else could do that analysis, and suddenly we could negotiate them down and get much more back to the community. That to me was a great model for what we're trying to do in many, many ways. So there's sometimes the government actually is ahead of us, and we just need to leverage all of those resources. And I think that's clear from the size of the problems we're dealing with today.
Can I add
something? Go right ahead.
Yeah, so I just wanted to say, it's interesting, the question about government, because when we are the communities that we're hoping to work with, when we think about the international aspect of it, we're talking about countries like in West Africa, in the Caribbean, with the exception of Haiti, because we freed ourselves in 1804. But a lot of Black countries are actually having their first freeborn generations, meaning the first generations that were not under colonization. They are just now coming into leadership roles. They are just now, completing like college, right? Like this is what we're thinking about. So leveraging government won't always be the option in the work that we're setting out to do. And I think that is actually part of why we need to create a fund like this, because that's a big gap, right? What we don't want to see is governments in these countries mimicking the harmful things that we've seen in mature democracy, right? Like in mature democracies, like we don't want to see that same mimicking. And so how do we jump in at an interesting point in time, and support leaders so that when they do become, the presidents and all of the other, parliamentary leaders that they may become, that they have, innovation in their pocket when they go into those roles. So just to say that there's like a completely different dynamic when you're thinking about some Black countries in terms of being able to work with government in the same way. You can't really always do that, even in the US as well, but we have more systems in place.
And I'm going to open up. We have phenomenal questions, but I also want to share that it's not just the state of governments, it's also the state of their capital markets. One of the things that I was very engaged with was really early on, Prosperity Now, which was then CFED, was the birth of the micro enterprise or microfinance field in the United States. And all these models that we tried to transplant, to replicate in the US that had been so successful internationally did not work here, because the state of the capital markets and the competitors and there was like too much capital, as we know, from all this predatory financial lending that was very, very different from these other countries. So it's a fascinating thing as we look at what are all the institutions that shape what the environment is like, and then how do we intervene? So we have a question from Alexandra Singh, one of my research assistants, which is, what stage of enterprise are you targeting? Is it the startup early stage? Has that changed over time? Does that vary by goal, as Mark was very clear? And I'd love each one of you to respond to that. How you think about that?
I'll start. For us, it will very much be startups, because again, our model is to bring leaders together to create new things. So we will definitely partner with longstanding institutions. We are in conversations with networks of philanthropies that are just now they are gaining their chops around equity and racial justice, right? And trying to figure out how to do that in their respective countries. And we are partnering with them. But it will very much be startups for us.
Chuck?
VPP has traditionally been a mezzanine investor. That's how we describe it. And the nonprofits that we've made our significant capacity building investments in are strong, high performing nonprofits to start with. I think to be able to absorb, first of all, one of us stepping onto their board and getting all in their business requires a certain level of sophistication. And then, this type of growth capital really helps them kind of jump a level from, they're successful, but then if you want to jump into that next tier, that's kind of what our investment does. But I think one of the challenges we've had and have had to evolve is there aren't that many nonprofits that hit that bar and are ready for that kind of capital. And so in Prince George's, we partnered with Fair Chance, another capacity building organization in DC, to run a nonprofit capacity building program with what we call high potential nonprofits that wouldn't be able to handle a VPP investment, but need to develop some of those kind of core skills and develop those leaders and develop those organizations so that hopefully they can get to the point where they can handle the larger growth capital investment.
Mark?
So I would kind of answer that question in two tracks, I would say. In terms of the kind of goal focus on changing education and workforce systems, our tendency is to work, as Chuck is, with kind of mid-sized nonprofits that have the potential to scale and be able to grow and reach more people. And that work even extends to kind of supporting government agencies, workforce boards, et cetera. But we also recognize that is inherently racist, because organizations led by Black and brown people have been starved of the resources they need to be able to grow. And so, in this new fund we created, we explicitly put an upper limit. And, we're considering very small organizations, only organizations led by leaders of color, only working on kind of racial equity, because we think it is so important to kind of provide support for emerging leaders. And we're going to not just provide money at the same levels, by the way, that we provide to the larger organizations, but also provide human capital, capacity building support to work with those organizations that are looking for that kind of support. So it's not a, kind of a simple answer, to that question, I think kind of, we need to do both.
So I want to pose a question, then I'll come back to our chat. There are a lot of students at the Yale School of Management who come with a passion for social and economic justice, and they leave with that passion. And how might they engage in your field? What would be your recommendations? Besides hiring, of course.
It's easy for us because just join SVP and you'll get kind of immediate experiences. And but I guess my broader kind of suggestion is to kind of follow your passions. Learn as much as you can about the areas that you're most interested in, and utilize your kind of networking skills to kind of get into it. And don't wait. Don't kind of feel like you have to as I did wait 20, 30 years to kind of get back to what is most important to you. As Andrea knows, I started off life as a community organizer, but then it took me after a long private sector career to come back to the work I'm doing now, and I was never happier than I am now. So,
Alexandra, any advice?
Yeah, I didn't say much about how I came to this role, but when I went to graduate school, I went to graduate school for public policy because I wanted to know what was going on in my hometown, which is a city that is largely Haitian and Cape Verdean immigrants. And I wanted to know what was going on because I had suspicion that there was something up with what was happening in my community. And what I learned right away was that it was the racial wealth gap manifesting itself on my community every day. And that line of inquiry led me to many things, including, PolicyLink and the Silicon Valley Community Foundation. And I am continuing that line of inquiry. Like, I'm still trying to solve this problem in my hometown. And I realize that it's obviously much larger than that. So I would say, coming out of grad school, one, follow your line of inquiry, because it can definitely lead you to meaningful work in the field. And then two, I think ways that you can get involved with the imperative, reach out to us. We want to talk to folks. Donate to the fund. We've been talking about equity, and for us, this is equity. This is equity work, right? If you invest in Black people, everyone benefits. And so I hope that everyone will think of themselves as someone who should and would want to invest in a fund like this. And also, I'm really excited about the research that we're going to be doing. We have a lot of really fun research questions for the nerds out there. So there's just going to be opportunity. So that's why I say connect with us. And,
just because you like research, you're not totally a nerd. Since I'm married to one, right? So, you do very useful things. Chuck, what's your advice?
So I would say that no matter where you go, you can have impact. The beautiful thing about how I think the markets are evolving and our society is evolving, you don't have to be in a nonprofit to be having a positive impact on people. And I want to actually echo something that Alexandra said earlier. She said, used to be that the Black was the risk, but we're trying to shift so that people see the Black as the value. And, Black is definitely at the forefront of my mind and a lot of people's minds these days. But I think, any kind of underinvested group, if you can take the mindset that this is a person and they're valuable, it's just a matter of whether I can recognize that value and bring that value out. If you take that mindset to any sector, any organization, and go about your work and with that mindset, then I think you can be fulfilled in a lot of different areas, and you'll do some good in the world.
So there's a couple of quick questions I'm going to pepper in our last 5 minutes. And thanks everybody for your wonderful comments. My My favorite questioner, Harold Glasser, who was with me in my last session, says, so what's the difference between venture philanthropy and enterprise capital? And what I'd say, and I think I saved that question, Harold, because you can see how even the definition of venture capital varies based on what you're aiming to achieve and what you can do to execute. My view is that enterprise capital is much more of a generic financial tool that can be used in small, large, new, old, other kinds of organizations, and it plays a unique role in the capital structure, but it shares many characteristics with venture philanthropy, which is capital is just a piece. It's also the capacity building and other expertise that come with it, that it needs to be a long-term investment over time. And I think this speaks to what we've learned about the broad issue of what makes philanthropy effective and what doesn't. One of the key phrases that we use all the time is this issue of reverse engineering. That so much of philanthropy, by requiring a organization to adapt to what it wants rather than the organization's mission, requires it to reverse engineer. That increases the risk, the operational risk, and limits the impact. And one of the themes that has run through this whole conference is how we think about risk, how philanthropists think about risk, how organizations think about risk, and how when our system doesn't work to really match sources and uses of funds, we assess risk incorrectly, right? Or if we are confronted with structural racism or racist systems, we see risk where there is opportunity. So that's kind of how I'm thinking about it. But maybe one of our key measures of success is how these fields come together, because they're sharing practices that work, no matter at what stage of an organization you're entering. So another question from my dear friend Sarah Gibson is saying that she sees a K-shaped curve, not just for the economy, but for which organizations survive. And that many of the smaller, and Mark, you spoke to this quite eloquently before, smaller, less capitalized organizations are going to have the roughest time going forward. How do you think about this issue and what venture philanthropy might do? Or do we need new funds for this very purpose?
I mean, I kind of have mixed views a little bit about this, because I think that, we do have a fragmentation in the nonprofit sector. And there's definitely a need in many instances, I think, for nonprofits to kind of come together to merge whatever, so that we can work kind of more efficiently and effectively. But I also would say you could apply innovation here too, because I'll take an example in a sector that we're deeply involved in, which is early childhood education. The real core of the system of childcare in our country are small family childcare providers, mostly run by women of color, sole practitioners. And they obviously are struggling, given kind of, COVID and everything. And in Connecticut, what we're trying to do is we're trying to, with the help of the Office of Early Childhood, create a shared services network, so that essentially these family childcare providers can deliver great education and loving care on a highly personalized basis, but be supported on a lot of the kind of business, financial, and other kind of operational kind of aspects. And I think that shared services idea could be applied in a lot of different areas. I mean, even Chuck talked about the Strive Network, which, we think is fabulous. There are 4 Strive chapters in Connecticut. Well, guess what? There is now a joint effort across those 4 Strive networks with one leader of policy in our state to really have much more impact legislatively on what's happening in education in our state. So, again, kind of an example of organizations kind of coming together. So I think there's a big opportunity in this area. I mean, economically, I've always been inspired by the Basque area with Mondragon in Spain, because here you had kind of what stood as the part of Spain with the worst economic situation from an economic development standpoint after World War II. And now it's the richest area of Spain. Why? Because there's been a whole system of co-ops created there that support one another with support structures. And during the Great Recession, they were much more economically stable than the economy overall because they were able to kind of work more collectively together. And they've created kind of training schools and social services and healthcare and other things to support all of these enterprises. It's now the 5th largest company in Spain, by the way. It's no longer small 60 years later. We can do those kind of things. In other words, kind of like, let's figure out ways to work together, and bring some of these kind of smaller enterprises or even nonprofits together.
And I'll say there is a model of this in one of the organizations that was on the panel earlier on enterprise capital that's doing exactly that in Wilmington and creating a culture of abundance, not scarcity, which I just thought was fantastic. So I want to thank each of you for a phenomenal panel and all our chatters who have been wonderful. There is a networking event afterwards, and hopefully some of our speakers can stay. But I'd like each of you just to give one closing sentence about where we go next. Mark.
I would say we have to redouble our efforts, and really focus in on the kind of structural racism and lack of opportunity and inequality, because otherwise it's going to kind of pull the entire society apart.
Great. Alexandra.
Yeah, to add to what Mark just said, investing in Black people is valuable. It is valuable and it's required.
And Chuck?
There's no silver bullet. No one person, organization, strategy is going to get it done. So you have to work across a lot of different things and learn how to partner.
Great. Thank you. And I couldn't ask for 3 better partners today. So thank you all. Thank you, students, for doing a phenomenal job. And anyone who can join the networking session afterwards, the